10-year Treasury note futures opened this session slightly lower, with yields edging higher. Yesterday's CPI in hand, geopolitical news flow takes center stage again, despite the fact that we saw Chinese money supply M2 fall well below expectations. And on the other spectrum, UK's industrial production and monthly GDP beat. But that said, had very little effect on the market, as did Goldman Sachs' cutting of US GDP estimate from 2% to 1.75%, and also warning of a rising probability of a pending recession in the next year. That said, rates in the early going were following what we saw in Europe, and basically global rates, European rates were flat to a little higher. Getting into the bulk of our session, we had a very volatile session with trading back to the unchanged and back and forth around the unchanged line. We did have University of Michigan consumer sentiment drop to levels we haven't seen since 2011, and year-end inflation expectations have risen to levels we haven't seen since 1981. That said, Treasuries in a little bit following price action of the dollar and WTI, both which are higher in a range-bound stock market. Also see a yield curve narrowing, the 210 spread below 25 basis points. That said, in the later afternoon, we got news flow that President Biden was working on revoking Russia's trade status. Getting into options, looking at June, I look at CME Group CVOL. 1 month options trading in the 45th percentile, 3 months trading in the 60th percentile. At the money vols are slightly lower today, as skew is as well. Both up variance and down variance are down, although the up variance or call variance is down more. June volume and options pretty heavy, 126 and 128 call strikes, and on the put side, the 126 half and 124 half puts. Lastly, CME Group E-Micro Mini yield-based futures volume today very strong. Yesterday we saw a volume of 3,799 with open interest of 1,999.